challenging year for everyone, with the Sri Lankan economy grappling to stay afloat. We have had our worst nightmares, from prolonged electricity cuts, long fuel and gas queues, to declaring bankruptcy for the first time in April this year. Have we overcome the worst? Are we setting or going into better times ahead? We are about to find out on what happened this year and what we can anticipate for 2023. To start off with the economy. The Sri Lankan economy has gone through a turbulent year. The economy has suffered profusely. However, in recent months, we can see day-to-day activity running smoothly, although the GDP continues to decline. How do you see this situation changing next year, Maheshi?
Yes, of course, Nusrat. So when we're talking about the first 3 quarters of 2022, so we had several repercussions during first 3 quarters. So we know that we had an energy crisis. So due to that, we had several repercussions in our manufacturing sector, and also if we take due to this foreign exchange crisis, we had several challenges in importing inputs, and due to this high interest rates, the cost of production also increased. So with all these things, we had a contraction during the first 3 quarters in 2022. And if we're talking about the fourth quarter, of course there are improvements we can see in the economy, but if you go through the overall economy, you can see still there are challenges in domestic front as well as in external front. So if we take the domestic front, we know that still we have high tax rates, still the interest rates are high, still we have this continuous import restrictions. So with all these things, we expect fourth quarter also will have a contraction in economic growth, and also if we compare with the previous year numbers, you can see that we will have unfavorable statistical impact in fourth quarter. So with all these things, we expect fourth quarter will have a contraction. However, going forward in medium to long term, we expect economy will bounce back gradually.
Also, Maheshi, talking about interest and inflation rates, we did see both the inflation and interest rates hitting all-time highs this year, another first for Sri Lanka. Although interest and inflation rates are expected to ease off and move within an expected range, what would be your expectations for next year?
When we're talking about inflation, so here you can see in this graph also, as you mentioned, during 2022, the inflation reached all-time high in September. And however, if you go through the numbers, you can see from October onwards, there is a month-on-month decline in inflation numbers. So we expect to continue this disinflation, month-on-month disinflation path in the period ahead, with the subdued aggregate demand backed by high interest rates, and also the supply side improvements. However, in addition to these things, we think it is important to pass in a timely manner these price changes in global commodity price changes to pass out to domestic front in timely manner is also important when managing inflation rates. And also if we take the policy measures Sri Lanka has taken to manage this inflation, we know that policy rates increased by 950 basis points. So to get the full impact of this high interest rate policy interest rate changes will take some time. So with all of these things, we expect inflation rates to stabilize in medium to long term. However, we expect this month-on-month disinflation path in the near term. So when we move into interest rates, so As I mentioned before, so during the 2022, central bank increased policy interest rates by 950 basis points. So their primary objective is to manage this high inflation rates. So along with this managing inflation rates, we expect to reduce the monetary expansion and as well as to manage the credit aggregate. However, when we talking about these interest rates, we do not expect further rate hikes in policy interest rates because it will further contract our economy. With the gradual decline, with the gradual disinflation path, we expect policy interest rates also to decline gradually when we going ahead.
Also going into the fiscal measures. So we know that the government did take some measures to stop the economy from crash landing. So what do you think the government, of course the government did take measures, but how has this helped our economy?
Government has taken several measures during 2022. So if we take each measures, like apart from 2022 budget, in 2022 they increased tax rates 3 times during May 31st, and again in August in the interim budget, and again through a new inland revenue bill in October. And also not only increasing this government revenue, but also they focus on rationalizing government expenditure. So for that, if you go through the 2023 budget, you can see they considering restructuring of state-owned enterprises, and as well as they are planning to freeze new recruitments for state sector employees. So with all these things, we expect government will manage their they will manage to increase their revenue in 2023, and also they manage their expenditure. However, if you go through the overall fiscal sector, we can see that there are still the challenges are remaining. So we know that government has limited access to global fund market. So most of the time they have to finance through domestic market. So in that case, we know that Sri Lanka still have high interest rates. So therefore they have to pay high interest expenditure if they fund from domestic market. And also due to this economic distress situation, we expect government government have to spend more on vulnerable parties. So with that, we expect government's recurrent expenditure to increase in going forward. However, so considering all these things, although we are bit vigilant whether the government can achieve these budget targets in 2023. So because we expect budget deficit to remain higher as a percentage of GDP in next year as well.
Also, we have seen the repercussions of being a net importing nation. Although we did restrict many imported goods last year and also this year, the fact that we actually were in a negative foreign reserve position has stalled economic activity to a great extent. What has been the outcome of all this, and where do you see us going from here onwards?
So if you go through the previous numbers, you can see except for June, Sri Lanka was a net importing country. That was the case for the last decade. So in June only we recorded a trade surplus after a decade. So that is mainly because during June we had stiff import restrictions. So with that we were able to manage our expenditure side. However, if you go through the numbers, you can see during post-pandemic period, Sri Lanka was able to record 1 billion export earnings per month in average. So that is a good thing. So Anyway, when we going forward, if we're talking about the export side, we are a bit, there are certain challenges in coming from global front. So we know that there is a global distress going on. So with that, if you go through the recent numbers, you can see there is a demand contraction for major exports such as textile and wearing apparel and spices and seafoods. Likewise, and if we talk about the import side, we know that currently we have low import expenditure because of these continuous import restrictions. But going forward, we cannot continue these import restrictions for a long term. So therefore, we have to lift these import restrictions. So with that, we expect this import expenditure to increase in the period ahead. And in addition, we believe that central bank will ease off these managed floating exchange rates going ahead, because if we go in line with IMF staff level agreements, they are expecting us to have flexible inflation rates. They expect to rebuild the reserves through flexible exchange rates. So with that, if we go for floating exchange rate, then also we will have an increase in our import expenditure. So that's about imports and exports. And if we talk about the other major inflows for the external sector, from external sector, if we talk about tourism and work remittances are the two major inflows. So in tourism also, you can see tourism numbers are picking up recently, so that is a good thing. So in tourism sector, like Sri Lanka is like environmentally attractive place, and we are like Sri Lanka is an affordable tourist destination. So if we take the advantage of these things, we have a large room to grow. But if we take this advantage from this, we can improve the tourism inflows as well going ahead. And we expect in upcoming winter season, these tourist numbers will pick up gradually. And if we talk about the work remittances also, you can see inflows from work remittances are picking up, but still we didn't achieve the pre-pandemic level, but the numbers are picking up. So and if you go through the post-pandemic period, you can see the departure of foreign employees are also increased than pre-pandemic period. So with that, we expect foreign worker remittances also to increase in the period ahead.
So Maheshi, let's move on to the IMF. I think that's the more impending question everybody has been asking and looking forward to rather. So reaching a staff level agreement with the IMF definitely was an achievement for Sri Lanka, but as we all know, the first tranche is yet to be received. If this is delayed beyond January, how would you see Sri Lanka's progress next year?
So actually this IMF board approval is, and this debt restructuring process is depend on how fast we can success in discussions with our external creditors. So at least we have to success in discussions with 75% of our external creditors. So so with that only we can say when we can get the IMF board approval. And so for these negotiations we need IMF support as well. So according to the sources, we can according to the sources so far, India, China and Paris Club members extended support for Sri Lanka's debt restructuring process. However, to get the IMF bailout, we have to go through a series of actions, such as like we have to go to flexible exchange rate policy, and we have to do certain improvements in monetary sector, and likewise we have to do certain series of actions before getting the IMF board approval. So so far we increase our tax rates, and we are going to introduce new new Central Bank Act, new Banking Act. So these things have to be sorted out before getting the IMF board approval. So their target on getting IMF board approval in January, we think that this target is quite optimistic target, but according to our opinion, we believe that Sri Lanka will go for this IMF board approval at least within the next 3 months next 3 months. So anyway, this getting a board approval will depend on how fast we are success in doing this actions before going to the IMF board approval.
Thank you, Maheshi, for that comprehensive economic update. So diving into the market activity, Heshan, we did see, despite the pandemic-related challenges, we did see 2021 being an exceptional year for the Colombo Stock Exchange, where it gained 80%. The market, however, has reacted to the economic woes this year. And although we have seen some resilience from time to time this year, we have seen a decline. How would you take us through the CSE's performance this year, and if you can just take us through the main highlights?
Yes, certainly, Nusrat. So it's a quite eventful year for the stock market, isn't it? So in terms of the stock market performance this year, initially we saw the market really booming, continuing the success of 2021. And then came the correction. Everyone was speculating, unfortunately at the wrong time. So from a local point of view, there was debt default, forex crisis, power cuts, fuel shortages. So these kind of things actually led to political chaos and social unrest. And from a global point of view, the war between Ukraine and Russia, Fed rate hikes, and global inflationary effects. So all these kind of things were not favorable for the market. Therefore, we saw SPI falling close to 50% from the January peak level. However, after hitting rock bottom, during the midway of 2022, these companies started posting some of the record-breaking earnings, and it showcased the resilience of the listed corporates. And at the same time, the appointment of a new president and some sort of economic reforms taken to bring a new sense of that we are coming out of this economic crisis actually aided some positivity to the market. Still, that from that we saw a bit of a recovery. However, at the end of the year, because of the elevated taxes and also the economic recession fears that coming into next year, and also considering the fact that the interest rates are quite high still at the time we are speaking now. So considering all those factors, at the end of the year, the market actually remained subdued, after the success of 2022.
Okay, moving on to again, would you agree that certain stocks were market movers this year? I think last year also it was likewise. But the indices have been sensitive to such price movements. So if you could just take us through the positive and negative contributors to the year and how that has had an impact on the indices.
Yes, certainly. So in terms of market movers, the central tendency and the volatility of the market was bit skewed towards a few stocks, which we have seen in 2021 as well. So in 2022 we saw the index falling more than 3,000 points. So the top contributors of LOC Holdings, Expo Lanka, Brown Investment, LOC Finance and Valuable One alone contributed close to 2,000 index points drop. And at the same time, counters such as Lanka IOC, LOC Development Finance, Sri Lanka Telecom, Aiken Spence, Richard Pearis and Company. So those were the top contributors on a positive note for the ASPI change in 2022. So the dependency on few stocks kind of represent the herd behavior of the investors, and it act as a bottleneck for the sustainable growth of the market if we are looking from that perspective of the investor representation across the board. So with the increased awareness on fundamentally sound companies apart from these top contributors, hopefully we can see some sort of a better representation going forward. But in 2022 we saw the contribution of few stocks onto the market behavior, and the market performance was somewhat significant as we saw with the numbers.
Thank you, Heshan. So let's talk about foreign participation. So we did see heavy foreign participation a few years back, which actually moved from 40% in 2018 to about 5% at present. So how would you see this foreign participation improving? Will it be a gradual or steady increase by next year? Your thoughts on that?
So as you correctly pointed out, the foreign participation on CSE turnover has drastically reduced, and on the other hand, the local participation on turnover has significantly increased, elevating the market turnover. However, if we look at the foreign selling side of the spectrum that we used to see before 2022, that has eased off to a great extent in 2022, and we are seeing foreign purchases increasing, mainly backed by Expo Lanka, buying back shares from the local investors, and this has resulted marginal increases in foreign inflow. So that is kind of spectrum that we are getting from the numbers. However, if you look at from the foreign investor perspective, what we do believe is that if we look at the market cap of CSE, it has fallen to USD 11 billion compared to USD 18 billion 5 years ago. So that is because of the significant rupee depreciation. So in that sense, the market looks really attractive from the foreign perspective. And also if you look at the market valuation of CSE in the Asian region, it is one of the cheapest in the region, if not the cheapest around the region. So in that context, the foreign investors are likely to see that there is bargain opportunities in the local CSE market. However, it is the uncertainty that block them in getting into the market at a rapid pace. However, we are seeing that gradually there are some improvements in the foreign purchaser side.
So moving back to the company earnings. So what we have seen over the years is, despite severe challenges posed, most companies have adapted and actually bounced back quite immediately especially during the pandemic. We did see the highest earnings of 257 billion in the first quarter of 2022. If you can just take us behind this exceptional earning growth, especially during the last 2 years.
Yeah, so in a way, the pandemic and the macro challenges that were presented against listed corporates, that has found to be a blessing in disguise. And before pandemic, the corporates used to generate on average around LKR 50 billion per quarter. However, post pandemic, the companies, the overall market earnings on a quarterly basis, that has started to jump above LKR 100 billion, and they had the highest ever of LKR 257 billion in first quarter 2022. So that was largely benefiting from the exchange gain and also the inflationary effect through price revision. So in a way, they have posted quite lucrative earnings, and currently starting from second quarter and leading up to the fourth quarter of 2022, we are seeing earnings are normalizing. However, still the numbers are pretty much above the pre-pandemic level, and with the unfavorable business environment that we are seeing at the moment, with the high interest rate and also the weak macro conditions, the general expectation is that the earnings are going to be somewhat subdued in the upcoming period. However, our belief on that is that the earnings will still be above the pre-pandemic level, given the inflationary effect taken onto the bottom line figures of listed corporate entities.
So, linking that question also again with the sector performance during the last 9 months, how would you say the sectors have performed?
Yeah, so majority of the sectors actually performed exceptionally well. Food, beverage and tobacco, capital goods, diversified financial and transportation sectors were the highest contributors to the overall earnings, and the capital goods and food, beverage and tobacco sectors, they largely benefited from exchange gain with the rupee depreciation, and the energy sector led by Lanka IOC turned out to be the performer of the year, especially again benefiting from the fuel price formula, with the ability of them to now renowned ability for them to manage cost escalation better than they used to do. So that has allowed them to generate quite a lucrative profit. And also the transportation sector, again led by Expo Lanka, has benefited from higher freight rates. So most of the sectors actually performed exceptionally well in 2022. However, sectors such as telecommunication, then utilities and consumer services found it difficult in 2022, where they have made losses. So except those sectors, actually other sectors have done quite well in 2022.
So Heshan, for your final question, and especially in terms of valuation, if you do compare the Colombo Stock Exchange and the regional peers, how would you compare their valuations, and what do you think the expectations would be for next year?
Yeah, so if we look at the market valuation, market PE and market price to book value of emerging frontier markets, Sri Lanka amongst the cheapest. So that actually indicates the significant discount that Sri Lankan market is trading to the Asian region. So this has been the case for a while. It's the uncertainty towards our the political and macro conditions, unlocking the true value of our market. However, even from a historical perspective, if you look at Sri Lanka's market PE for 5-year average is 11.2 times. That actually reflect a significant discount to the current market PE of 5.2. So even after considering a 30% discount to our CSC market PE, 5-year average market PE, the justified or the implied PE on a conservative basis would come to around 8 times. So now what we will have to look at is the forward earnings. So in that context, the expectation is that the earnings will normalize and we'll see a contraction in 2023. And even with that subdued earnings, if you look at the forward market PE, it still we believe it will be under 8 times, given the fact that still we are trading at attractive valuation. So if you look at the market price to book value, the 5-year average comes to around 1.3 times. Again, at the moment we are trading below 1 time. The market value is less than the book value of listed equity. So again, with the earnings having a systematic growth over the period, again the book value of equities will continuously increase, and it will make our CSC market price to book value even cheaper than what it is now. So from both sides of the market valuation, market PE and market price to book value, it gives the opportunity for medium to long term investors to actually have value for money. So it's the uncertainty towards political and macro conditions blocking them and hindering them entering into the market for the medium to long term. Still we believe that after discounting for all those uncertainties and challenges, still the market presents good opportunities for medium to long term investors.
Thank you, Heshan. Thank you for that comprehensive update on the market. So moving over to you, Shalini. If you could just take us through the major highlights in terms of the tax changes and also the corporate highlights during the year.
Yes, so as Maheshi mentioned in the fiscal changes that happened during the year as well, the new Inland Revenue Amendment Bill was presented. So this had an impact overall on all corporates, with the standard corporate income tax being increased to 30% from a previous 24%. And we also saw that many of the concessionary tax rates that were previously there were removed. So on the other hand, on the consumer's point of view, we saw many of the taxes either being increased or new taxes being introduced, which will most likely be passed on to the consumers. So these include the VAT increasing in two stages actually, from 8% to 12% and then again to 15%. And also the Social Security Contribution Levy was introduced on 2.5% on turnover, and the telco levy was increased to 15% from a previous 11.25%. So all these are likely to have a cascading effect to the consumers. So on the other hand, if we look at the personal income tax, the threshold was reduced to 1.2 million. And the rates were also increased. So these are likely to squeeze into the consumer spending power. So that is on the taxation. And I'll also touch on two key corporate events that happened during the year, with the regularization of the casino industry being brought in by this new regime. This actually paves the path for new entrants to obtain a casino license. In terms of the listed company point of view, this removes a bottleneck that JKH has been having for a while in renting out its gaming facility to an operator. And it's a positive for the Cinema Life project to seek an international operator to rent out the space and generate revenue both in terms of rental income and also even have the spillover effects to the tourism sector as well. And the other major highlight that I want to touch upon here is the Trinco oil tank complex development project. This was approved earlier this year in the cabinet. This will be a joint venture between the CPC and LIOC, and currently CPC holds 24 tanks and LIOC holds 14 tanks, and this lease was also extended for a further 50 years. So now feasibility studies are underway for the first phase, which is the development of 10 tanks. So those are the key corporate events that I want to highlight in terms of the impact to the market.
So moving on, so as we have heard from Maheshi on the economy and also what we are experiencing actually for ourselves, it's going to be another challenging year ahead next year. How would you look at in terms of prospects, especially in terms of sectors? What is BRS sector outlook for next year?
Yes, so I'll start off with some of the winning sectors during the year 2022. So energy sector, mainly driven by the performance of LIOC, was one of the winners of 2022, we can say. So moving forward as well, with the higher transparency, especially with the newly introduced pricing formula. Going forward as well, we expect it to act as a positive for LIOC. And also what's beneficial for them is that there is a lag between the global prices and the local price revisions. So that is a positive aspect for them. And also they are targeting 96 new sheds. And as I mentioned on the Trinco Petroleum terminals, this will be
improving their storage, and obviously would aid the bunkering business, which is a natural dollar earner. So that is the positive outlook that we maintain for the energy sector. And if we look at transportation sector, that driven mainly by Expo Lanka. Although the near-term present outlook remains negative, we actually maintain a positive medium-term outlook for this sector. We have seen that the freight rates and the volumes have been declining recently, but towards the latter half of 2023, we do expect the volumes to bounce back. And in terms of Expo, there is growth on anticipated mergers and acquisitions, and there further regional diversification, and also carrier partnerships and value-added services are expected to bring stability to their yields. So moving on from there, also USD earning counters in particular is an area or a sector in general that will have a positive impact. This includes exports, apparel, exports of goods and services and all. So they will continue to benefit from a weaker rupee, and if the rupee goes into a floating regime as well, they will continue to benefit in that aspect. Although the global demand has seen some weakening in the face of global recession. And also we have to be mindful of companies that do have exposure to USD costs as well, whether they import their key raw materials. So next, if we look at the utility sector, presently it's having a neutral outlook, but this is especially stemming from the delays in the payments by the CEB, which is creating a lot of working capital issues and higher finance costs for this sector. But in the medium term, we are somewhat positive on this sector with high focus and the opportunities in the solar and wind segments. With this new tariff system coming into place, we expect it to augur well for the industry in the medium term. And also moving on to the plantation sector counters, we saw them recording quite all-time high earnings during the past couple of quarters, and however going forward we do expect the earnings to moderate with the demand and supply dynamics, and commodity prices are subject to a lot of volatility, and with the fertilizer availability being improved, we expect the production of tea to improve and the prices to balance off. And in terms of crude palm oil prices, the global prices have already witnessed a decline, and that will be reflected in the local prices as well. Although local prices do have some cushioning with the import taxes and also the weaker rupee. So the declining crude palm oil prices will not, although having an impact on the local prices, it will not be as steep as the fall in price globally. And there are some things that we need to look forward to in this sector, especially given the high inflationary pressures in the economy. There is a possibility or a probability of another wage hike going forward. And something that especially the counters with exposure to palm oil would be looking forward to is whether there will be a change to the government stance on palm oil cultivation. So that's on the plantation sector. And then next I'll move on to the construction sector. That is also with this current macro conditions, the outlook seems bleak in the near term, and we see many of the government-owned projects have either been halted or slowed down, which is having an impact on the industry as a whole. And if we look at the tiles, cables and the aluminium sectors in the immediate outlook, with the slowdown in construction activities, the outlook seems negative. But depending on how the situation can pan out, it could turn out positive towards the latter part of 2023. So we see that the domestic market has contracted with the high interest rate environment and the high inflation rates prevailing, playing a huge role in that, and the consumer purchasing power has diminished, and if it picks up at least towards the latter part of 2023, it will be a positive for this sector. And on the other hand, there's margin contraction we do expect with the high costs, although the impact can be minimized to some level with the higher selling prices. And export market is something these sectors can explore as a medium-term catalyst due to the contraction in the contraction in the local market. So as we touched upon earlier as well, the import restrictions have been benefiting these sectors to a larger extent, but we cannot expect it to go forward to the entire year as well, and it's more likely to be lifted, or at least in stages. So this will get these companies back into the competitive space. And however, we also have to keep in mind that even if import restrictions are lifted, imports are still going to be much expensive because of the higher duties and the rupee devaluation, and even on a global level, the costs of production are spiraling. So this is going to make imports much more expensive. And if I touch upon the agriculture, the poultry and the dairy segments, they have been quite resilient amidst a lot of tough, challenging times. And there is a lot of focus on improving the food security as well. So that is a positive for this segment, and we are quite hopeful now with the availability of the fertilizer being improved, although at a higher cost, that this agriculture sector as a whole will see growth during the next year. And especially in terms of poultry and dairy feed, which have seen a lot of challenges during the past year. Now with the fertilizer availability, there is expectation that the local maize cultivation, the production will improve, thereby easing off the pressure in these sectors. And however, on the other hand, the overall reduction in consumer spending will have some impact on the demand side as well. And leisure sector is something that as a country we are very hopeful about on the prospects of the leisure sector. So the inbound and outbound travel is picking up substantially, especially even on a global scale after a 2-year lockdown. So concerns in terms of the listed counters are that most of these counters are already exposed to a very high debt levels. So on the other hand, given that the Maldives tourism has performed quite well, counters with exposure to that will have positive outlooks going into the next year. And last but definitely not the least, we have to touch on one of the most important sectors for the economy, the banking and the non-bank financial institutions. In the short term, this sector is likely to be under a lot of challenges with weak asset quality and the demand for credit deteriorating with the high interest rate environment. And the banking sector earnings are going to be severely impacted by the provisions of foreign debt restructuring. And as local debt restructuring is not completely out of the cards as well, the possibility of that is going to be extremely challenging for the financial sector. So that is the BRS outlook on the key sectors of the Colombo Stock Exchange.
Thank you, Shani. I think that was quite a comprehensive update on the sector outlook and what BRS anticipates for next year. So coming to the end, we enjoyed putting this video together for you on what happened during the year and also for the outlook or the likely outlook for 2023. I would especially like to thank my colleagues here, Maheshi, Heshan and Shalini for their comprehensive views. BRS Research along with Barclay Trelica Securities wishes all our viewers a prosperous 2023 and looking forward to definitely better times ahead.
The smart way to grow your money. Contact us today to invest wisely. Barclay Trelica Securities.